Hello everybody, we're here today at the Kaplan Business School. I'm joined by Michael Steed, who is the AAT tax guru and accounting technician columnist. Michael, welcome to you. We've been sent lots of questions into the magazine about taxes for 2013, and one of the biggest questions we've had is about the new child benefit tax charge, which applies from early January. Michael, can you explain to us a little bit more about what this charge looks like?
Certainly will do, Ben. The new child benefit tax charge is effectively a tax on children. It's a tax on households, and there's been a lot of cynicism about this. If I just quickly go back and remind you about what happened in the budget in 2012, I think just a second or two on the history will help put it into perspective. And I think it's also widely accepted that Budget 2012 was one of the most politically inept budgets that we've had for a long time. So what the Chancellor was trying to do, and in the original proposals that came out in March 2012, was to say we're all in financial trouble, the richer folk will have to pay more as a result of this. And he set the bar and said any parent, any household with parents in, where one of them was a higher rate taxpayer, that household would be subject to this higher income tax charge on child benefit. But there was an absolute hue and cry over that one, amongst the other things like the granny tax and the pasty tax. And the Chancellor reset the bar because the criticism was that there were an awful lot of very ordinary taxpayers who'd just been brought into higher rate tax because of what economists call fiscal drag. Yeah. In other words, over the years, you just don't raise allowances as high as incomes are rising. So a lot more ordinary people, senior nurses, police officers, teachers, that was the argument, that these very ordinary folk who had nothing to do with the financial crisis were in effect being dragged in and taxed as a result of that. So the Chancellor went back and rethought it, and he then said, okay, rather than going over a cliff at the higher rate boundary, what we're going to do is we're going to have a graded tax that cuts in at 50,000. We'll call it income, and we'll come back to that in a second. And then a complete tax charge where you lose all of your benefit by the time you get to 60,000. So that's the basic shape of it. Shall I give you just a little bit more detail? The little bit more detail, it goes something like this. If you are on 50,000, then you will have your full child benefit, no tax issue. And then as you creep above that, for every £100 of income that you are above the 50,000 level, you will lose 1% of your child benefit. So by the time you get to 60,000, the tax charge is equal to the child benefit itself, so it's just completely negated. There are some practical issues arising out of that, and if we need to, we can talk about that just a little bit later. But that's the effective message. Now, this, I said, it's a tax on households, a tax on children, and the reason is this, that it's actually on the household, and you look not at one earner, you look at two earners within a household. So if you look at the classic scenario where you've maybe got mum and dad and both of them are working, they are regarded as partners, and you look at the higher earning partner. So if mum's the higher earning partner, you look at her income. If dad's the higher earning partner, you look at his income. Yeah. So if you've got perhaps the very classic one where dad's earning, mum's at home looking after the children, you've got one earner in the house, you only look at dad. But I did say it's partnerships, and that's quite a subtle meaning there, because it's not partnership in the conventional sense. It's partnership in the sense of partners. So a husband and a wife living together. You can have people who are unmarried living together. Be they same sex or different sex, the classic shack-ups. Yeah. And there are all sorts of practical difficulties in that. How long do you have to be spending with them in a week in order to be living together? And, we know that there are going to be practical difficulties on that. So effectively, you choose the household that's got the biggest earner in that, who's a partner, who are receiving child benefit, and then that person is placed under the spotlight. And that person is the income that you test. Now, the way you test it, it's quite subtle. You refer to this thing called, I'm sorry to go tax techie on you here for a second or two, but it's called adjusted net income. Right. It's your income, which is then made net. Mm-hmm. And I'll talk about that in a second, and then you adjust it. Yep. So if you're earning, say, 50,000, or you've got 50,000 through self-employed profits, then that is your income. If you've got some losses, you're able to take that off, or you've got salary sacrifice, yes, that will lower it, and then you adjust it. So you play around with it a bit.
And it's interesting you brought this term adjusted net income in. It's probably something that people in HMRC are used to, but maybe the average Joe is not used to that term. And a whole range of things can contribute to that, can't they? You mentioned pensions, but also actually pertinent to this, childcare vouchers come out of one's gross salary. There are a whole bunch of other schemes. I think there was a bike scheme at one stage. I don't know if that's still going. And on that note, are there things that we can advise our clients to do to help mitigate the impact of this charge?
There certainly are to some extent, and it's exactly the same logic as you'd apply to a pensioner, for example.
Yeah.
Not here in child benefit terms, but a pensioner who was, say, just above the income limit and was looking to have their allowances eroded. They're tested, their means tested by exactly the same concept, that of adjusted net income. Also people on incomes over 100,000 where they start to lose their personal health. It's exactly the same thing. So it's a very deeply embedded system, and it's a very fair question that you should ask about adjusted net income, because we have to take your basic money coming in wherever it comes from. If you've got any losses, most people won't have, but if you're in self-employment, you can reduce that then. If you've got a salary sacrifice scheme through some of the things you've been talking about, bike schemes, pensions and the rest of it, those all reduce your income down. So if you're just above 50,000 and threatening to have some of your child benefit refused, you could actually take some salary sacrifice, which means your gross income drops, and then you're below the 50,000. So that's one of the ways you can do it. So yes, salary sacrifice has an important part to play in this.
And it's fascinating that, Michael. There's another aspect to this charge, which is that for those people who are in that bracket, 50,000 to 60,000, there's a possible administration burden, isn't there?
There is indeed. And that is that if they choose to keep their allowance, to keep receiving it, the child benefit allowance, that makes sense, but they've got to then pay the tax on that in due course. And the administrative burden is that if, for whatever reason, they're not already on tax return, they've actually got to register under self-assessment to complete the tax return in order for them to be taxed upon it. So they may get sucked into the system. A lot of them will already be there for other reasons, but it will place an extra burden on those people who are not yet in self-assessment. Right. So absolutely.
And what is your advice for those people who are earning towards the upper end of that bracket? What would you advise them to do?
Probably the answer is if you're between 50 and 60, and it doesn't matter where you are between 50 and 60, then you're probably going to take the child benefit, which will be paid to you untaxed because it's not per se taxable, and then the high income charge will come in and then grab it back progressively. So those between 50 and 60, in your example, they're quite close to 60, and that makes it more difficult. If they're quite close to 50, I'm pretty unequivocal about that. Take it and then pay the tax in due course because it won't be that much. If you're at 60 and above, there is an argument which the HMRC are encouraging people to do, to actually write to them and do it now and say, just don't pay it to me because I can't see the point of receiving it only for it to be taxed in due course.
Finally, Mike, I was fascinated by your talk about what constitutes a partnership. I want to look at it here from the government side, and there is going to be quite a lot of grey areas, isn't there, here, in terms of what government actually classifies as a partner, without going to put too fine a point on it. There are sort of different gradations, if you like, of relationships, and how do you think government will actually decide on what constitutes a romantic relationship?
I like the idea of the romantic relationship being relevant to tax. Tax is not really about romantic relationships. What a lovely idea. But sadly, the hard facts are that there are grey areas there. I mean, how many nights a week does your partner come to stay with you? I mean, the toothbrush, do you leave a toothbrush there? Or do you have your clothes there or whatever it is? Because there will be a lot of people conducting long-range relationships, because they're torn apart by geography, or because if they stay together 7 days a week, they soon wouldn't be together, so it operates better at 2 or 3 days. So does that constitute living together? So absolutely, Ben, it's a very good question, and I think there's a lot of grey areas yet. Obviously the HMRC are giving out sort of their take on it, but there are some grey areas, certainly.
That's fascinating, Mike, on the salary sacrifice. Are there any other things that people can do to help reduce the impact of this child benefit charge?
It certainly is, Ben. We may have mentioned it briefly, but let me just underscore the point there that people, especially those quite close to the 50 end of the spectrum, will consider making contributions to pensions and also or contributions to charity, because both of those grossed up will be effective for reducing your income. Those are the adjustments. If you remember, we talked about adjusted net income. You take your income, you take off your losses if you got them, or salary sacrifice, that brings you to net, and then you adjust them. And the two principal adjustments will be contributions to charity, contributions to pension funds. So they certainly will help those. I suspect more towards the 50 end than the 60 end, although they'll be effective right up through it. And beyond 60, you could have somebody beyond 60 who will make some pension fund payments, charity payments, and that will bring them back into the band, the 50-60 band, where they will receive some child benefit after tax.
Thanks, Mike. I'm still slightly unclear as to what happens when the total household income is even to another household, but the breakdown between the husband and the wife is different. Can you explain what happens there?
This is one of the major unfairnesses in the system, Ben. If you imagine two households next to each other, number 42 and number 44, you might have two parents in number 42, both of which who earn £49,000. So you've got no partner that's above the 50,000. They will get, you've got two earners, they will get a full child benefit with no erosion due to tax. And yet in the house next door, number 44, you could have one earner who earns 60,000, so much less than the total of the house next door, and they would have no child benefit because the whole thing would have been eroded by the tax. And that's one of the unfairnesses, and it just seems to be lodged into the system. It seems to be embedded, and unless there's something major going to happen between now and January in the autumn statement, and that's pretty unlikely at this late stage, I think we're just stuck with that incredibly inequitable, unfair result.
Thanks, Michael. A lot to think about then on child benefit for the coming year.